It's now time for the fun part. Let's travel to West Africa for Mark, our COO, to give us a virtual tour of our assets. Mark joined Endeavour in early 2019 following the successful build of ET and Hyundai. His arrival really marks the moment that Endeavour transitioned from being a project company to a producer focused on operational excellence. Mark has significant operating experience in Africa, across both open pit and underground mines, as well as CIL, heap leach, and refractory processing circuits. Mark, over to you.
Thanks, Martino. Over the next 20 minutes, I'll take you on a virtual flyover of our portfolio of mines. But before I start, let me explain a little about how we operate. We have a very hands-on management model, and our executives are in West Africa frequently. It's so important to spend time on site and in the regional offices with the various teams. They've done an amazing job keeping our assets running throughout the pandemic and through the integration of both Semafo and Teranga. International travel is made easier by having our regional headquarters in Abidjan, from where we can get to 6 out of 7 of our mines in under 3 hours. One really important aspect is the way we empower our general managers to run the operations and ensure we have the right balance of corporate oversight and support with mine-level decision-making. We are also very proud to have 3 West African general managers, plus many more of our talented local professionals in senior roles on site and in the regional offices, as it is a priority for us to continue to enhance local opportunity and leadership. Safety will always be our number one priority. Whilst we are pleased with our strong safety record, we continue to strive to improve by focusing on leading indicators, including on-the-ground leadership and through workplace audits and task observations. I'm really proud of what we've achieved within our portfolio, including the integration of newly acquired assets over the past 12 months. Let me now walk you through our operating mines, starting with our flagship operation, the Sabodala Misawa complex. Sabodala Misawa is a great asset with the potential to get even better. Something that really impressed me when I first visited was the self-sufficiency developed by the team after many years as Teranga's only asset. Some great systems have been developed through a predominantly owner-based approach to many aspects of the business, which aligns well with the Endeavour approach. We acquired the mine in February 2021 and worked to rapidly integrate the team and systems within our own operating platform. Last month, our general manager from Hyundai transferred to Sabodala, which was part of a planned transition, as the incumbent general manager had indicated his desire to stop expat work by the middle of the year. In 2020, Teranga acquired the adjacent Misawa permit, which hosts significant deposits of high-grade refractory mineralisation, which is overlaid by free milling oxide ore. This was game-changing, as the combined mining complex now has the potential to be a long-life, low-cost, top-tier asset. Owner mining is undertaken with face shovels and 100-tonne trucks, with multiple open pits and a central processing facility. The team did a great job in 2020 to construct a 30-kilometre haul road and quickly establish mining at the Sophia pits at Misawa, which now represents a large portion of the feed. Following a number of stage expansions, the processing plant throughput has steadily increased from 2.4 million tonnes per annum at startup to 4.4 million tonnes per annum today, and is currently equipped to treat oxide and fresh ore via a carbon-in-leach circuit. Despite being more than 12 years old, the plant is in good condition and achieves very good overall utilisation. The Phase 1 expansion is underway and will allow for the processing of higher-grade Misawa ore more efficiently by enhancing overall carbon management associated with increased residence time, increased elution, regeneration and electrowinning capacity, and finally a gravity circuit to recover free gold ahead of the carbon-in-leach circuit. As of late May, all civil works were completed and the first shipment of structural steel and plate work arrived, allowing assembly to commence on site. The additional electrowinning cell is now being commissioned ahead of schedule. Phase 1 is on track for completion in Q4 2021. Phase 2 of the expansion will enable processing of high-grade refractory ore. This incorporates a bio-oxidation plant to be located adjacent to the current Sabodala plant, as you can see here. A feasibility study is underway with a focus on several key optimisations, including improved geometallurgical modelling and enhancements to the processing flowsheet. The timing of our Teranga acquisition was very important, as it allowed us to continue with the Phase 1 expansion work and evaluate the Phase 2 PFS outcomes ahead of commencing the feasibility study. We see an opportunity to further enhance the project relative to the design considered in the PFS and look forward to sharing the results later this year. We believe that there remains a significant opportunity to further enhance our reserves at the operation, which Patrick will now speak about.
Fittingly, our largest exploration budget in 2021 is at Sabodala Misawa, where we plan to spend $13 million. The ultimate goal for us is similar to all our other operations, which is to increase the mine life as close as possible from 10 years, while adding high-grade ounces that will help to ensure the plant is operated to its maximum capability for as long as possible. This is what we already achieved for ET and Hyundai, and that's our goal for all the recently acquired operations. In the short term, at Sabodala Misawa, we are mainly targeting non-refractory ore resource. This will allow us to optimize the mine sequencing and grade profile to maximize return from the Phase 1 expansion that's supposed to be completed later this year. On the longer term, we are also looking to add to the inventory of refractory ore sources, and this will provide additional feed for the proposed Phase 2 expansion.
Moving to Ity, we are incredibly proud of how the mine looks today, how well it is operating, and the reserves that we have, which is a large contrast to when we first acquired a stake in the mine in 2012, with only 2 years of reserves. Today it has a very bright future with the capacity to produce at 250,000 ounces per annum over at least 10 years. Ity has been in operation for more than 20 years, starting as a small heap leach mine. Given the exploration success and change of thinking towards a higher capacity carbon-in-leach plant, we were able to transform the mine completely. The plant was commissioned in early 2019 and following a series of upgrades is now operating in excess of 5 million tonnes per annum. The topography of the region is undulating, densely wooded, and has the Cavalli River snaking past many of the deposits. This requires some very careful planning for the mine layout, and the projects team have done a great job to accommodate the plant, TSF and other facilities in a very compact footprint, whilst enabling scope for exploration to continue around the existing pits. We have now successfully completed 4 small river diversions to enable us to access and expand some of our pits. Ity is much more of a processing operation than a large mining operation, with a low strip ratio and several smaller deposits. Achieving the most optimal ore blend to the processing plant is critical, given the many ore types and sources. The tailings storage facility is designed by a reputable consultancy and is fully lined with both clay and plastic sheeting. The walls of the dam are raised in increments every 1 to 2 years, which includes extending the clay and plastic lining. The TSF also has a leak detection system, monitoring bores and piezometers in the walls. Every year, our TSFs are inspected by the designing consultant, who is also known as the engineer on record. Le Plaque is a new discovery approximately 8 kilometres south of the processing plant, with a higher average grade than our other pits. Now that the haul road has been completed, grade control drilling is well underway, which places us in good position to start mining later this year. We've been very fortunate at Ity to have so many exploration targets, which leads to extensions and merging of pits, some of which only become possible to drill once river diversions are completed. This means that our planning and operations teams have to be very adaptable to the changes and ensure that there is always an eye to the future with placement of waste dumps and staging of pit cutbacks. As we begin Le Plaque, we are already looking ahead at the next discoveries, which Patrick will detail.
Ity is really a great example of how our exploration platform can perform while achieving very exciting results. We have been adding over 2.1 million indicated ounces between the end of 2016 and the end of 2020. And this has allowed us to extend and expand the production profile while keeping all the costs quite low. On the right, you can see the numerous targets that still remain on this extensively mineralized belt, which we control fully. Our total budget at Ity for this year is going to be $9 million. We are going to spend this money to replace depletion and to maintain a minimum of 10 years of mine life, while opening and delineating nearby new targets. We think the best opportunities to do so in the short term are by continuing to extend the Le Plaque and the West Flotuo deposit, the latest one being our latest discovery, and also to do additional work around the Daapleu area. With the recent new mine plan and the new project added, it's a bit lower down the exploration priority list now. But due to its quality, we still have a very active program in ET. In addition, the anticipated small diversion of the Cavalier River are anticipated to make some additional lateral and down-deep extension of Colline Sud accessible. It will be the same for deeper Bakatouo and Walter along the river.
Hyundai is another great example of our approach to exploring, developing and operating assets. The mine was developed entirely during Endeavour's ownership from initial studies through to permitting and construction, and began operations in late 2017. As far as mine layouts go, Hyundai is one of the best examples and benefits from the largely flat topography, though credit goes to the projects team for the quality of the design and construction. This has contributed to the successful execution of the project, which was completed on time and on budget, with the plant now processing at 30% above nameplate. Open pit mining is done from multiple deposits with excavators and 100-tonne trucks, with the drilling and blasting activities contracted out. Following debottlenecking and minor upgrades, the carbon-in-leach plant now operates in excess of 4 million tonnes per annum. We recover up to 30% of the gold by gravity, with the remainder through the CIL tanks, where the gold is recovered onto carbon before going through the elution and electroning process prior to smelting to form gold bars. Hyundai is now in its 4th year of production, and we are very pleased with how the team has matured and improved across all aspects of the operation. With the addition of the Carry deposits last year, we have even more mining and processing flexibility. Given our commitment to sustainability, we're also looking into commissioning a solar plant which will provide low-cost, renewable electricity for the mine and reduce our diesel consumption. This will be a really exciting development for the group, as we will then look at options to repeat this in our other operations. There are significant opportunities to extend the Hyundai mine life beyond 2031. These include the potential integration of the recently acquired Golden Hill property, which is around 30 kilometres away. We also see additional scope to continue to add ounces, just as we have already done with the Carry area, through the discovery and development of satellite deposits.
Hyundai is another very good example of our exploration success over the last 3 years, with over 2.6 million indicated ounces added since the end of 2016. And most recently, we have added high-grade resources at Carry Pump, which have significantly improved the overall mine plan of the mine. This year, we've got a $7 million exploration budget, which will be mostly focused on replacing the depletion, as usual, but also completing exploration over the entire remaining Carry area, as well as the entire Vindaloo area. We will also be working intensively toward the north of the exploration license, where we will be addressing other attractive targets such as Mambo, which is currently being actively delineated.
The Mana mine has been in operation for over a decade and was acquired in 2020 as part of the Semafo acquisition. Mana is a combined open pit and underground mining operation, feeding a central CIL plant from an adjacent open pit complex and an underground mine 15 kilometres to the southeast. Production commenced in 2008, with nominal capacity increasing over time to the current throughput of around 2.8 million tonnes per annum. The plant is well maintained and operates very consistently. Open pit mining is done by excavators and 100-tonne trucks, with half of the fleet owner and half contractor, based on the Semafo strategy at the time. Since the acquisition, we've focused on optimising the asset, which started by bringing in an experienced general manager with over 40 years of open pit and underground experience. We have reduced the size of the expat workforce and have shifted the focus to really empowering the site team. production has benefited from the ramp-up of the CU underground operation last year. Following a detailed review of the Wona North open pit cutback, and given the success of the CU underground, the decision was taken to forego the next cutback and rather to develop this as an underground operation, which we expect to start next year. Open pit mining will continue at Wona South until 2022, after which time the mine will revert to 2 underground mines until any further open pit satellite deposits are proven. Mana is also benefiting from a fresh pair of eyes under a new exploration team, and Patrick will describe their focus.
For Mana, we have a total exploration budget of $8 million, with the objective, like everywhere, to increase the mine life closer to its 10 years. SEMAFO had previously completed some extensive exploration in the area, but we still see lots of additional opportunities remaining. In 2021, we are going to concentrate our exploration effort on open-pitable oxide targets, which are within a reasonable trucking distance from the mill. The main area we are going to concentrate in 2021 is Maoula, which you can see is located at the boundary between the exploitation license to the southwest of Mana, as well as looking for extensions in the Sioux North and South areas. In the Sioux underground area, we see an opportunity to extend mineralization at depth and to consider a much larger open pit concept.
Our next asset is the Bungu Mine, which we acquired during 2020 and where we recommence mining shortly thereafter. As with Mana, following the acquisition, we put in place a new general manager who previously ran our Iti mine and has a wealth of experience mining in the region. Under his leadership, the team at Bungu has really taken a step up, and it is pleasing to see the results. Given its location, we've put in place a comprehensive security plan which leverages our strong relationships with the government of Burkina Faso and regional security forces. We have invested significantly in mine site security, including the construction of an on-site airstrip, new facilities and other measures. This allowed us to restart mining operations in Q3 last year, utilising a very capable West African mining contractor. Open pit mining is fully contracted and utilises a number of excavators and 100-tonne trucks. The 1.3 million tonne per annum carbon in pulp plant was commissioned in 2018. It also has a gravity circuit that recovers up to 50% of the gold, which is a very high percentage. The mine consists of 1 large open pit and 2 smaller adjacent satellite pits. Much of the optimisation potential at Bungu is based on exploration success, which will start along strike of the existing pits, then expand further into the exploration permit in parallel with enhanced security measures.
At Bungu, we see for 2021 the best opportunities lying just nearby the mine. Our total exploration budget at Bungu for this year will be around $7 million. Our primary goal is also to extend the mine life toward our 10 years mine life target by testing all the remaining deposits extension around the existing mine and open pits. We also see the potential to modestly step out of the area of the Bungu North, Natugu Northwest and Natugu Southwest target.
Moving to Karma, which is our smallest mine in terms of ounce production and also has the shortest mine life. This is a low-grade heap leach which commenced operating in 2016. The team has done a great job to keep all-in sustaining costs below $900 per ounce for the first 5 years of production. The operation is well led by a Burkinabe general manager with predominantly local workforce with a strong drive to succeed. Given the low grade, efficiency is key and the team are doing a great job in this regard. Open pit mining is done using excavators and 100-tonne trucks, mining mainly oxide material with low blasting requirements. Last year, given the short mine life, we transitioned the mine fully to contract mining, which has worked really well. As a heap leach operation, all mine material is stacked on the lined leach pads, which represent the final storage location for the processed ore. We are investigating a high-pressure leaching option once stacking has been completed, in order to recover any remaining gold locked up in the heap, and ultimately to flush out any residual cyanide prior to closure of the leach pads, which will be rehabilitated in situ. There is definitely good exploration upside at Karma, with potential to have many small deposits along with sulphide ore at depth. The reality, however, is that this is not a core operation for Endeavour, with so much exploration focus on our other assets. Wahgnion is the youngest mine in the portfolio, having been commissioned by Teranga in the fourth quarter of 2019. Wahgnion has a carbon-in-leach plant which processes ore from 4 different open pit groupings. Due to the size of the pits, mining is done with smaller excavators and trucks than used at our other mines. There are many small pits which require careful sequencing and placement of waste dumps, though this also enables us to backfill some of the pits with waste. Since startup, the plant has produced sustainably at 25% higher than design capacity, enabling a throughput of 3.6 million tonnes per annum. We are also using a contractor in the satellite pits to increase mining volumes to support the higher mill throughput. The operation is host to a number of prospective near-mine exploration targets, so our focus is on identifying those ounces which will contribute to extending mine life and potentially increasing production through higher grades. The CIL plant was designed by Lycopodium, who also designed our Ity, Hyundai and Bungu plants. It is very reliable and is equipped to process a combination of oxide and fresh ore consistent with our other operations in the region. One of the things that we are proud of at Wahgnion is how the team have managed the community relations and village relocations. By providing new land for farming and developing some intensive agriculture projects, we have been able to retain strong community support, which is really important to us. To meet the above nameplate throughput, we are focused on advancing the satellite pits with mining at Fukura underway and now early planning for Samavogo, as well as ongoing resource drilling to optimise the pits and mine sequencing.
Before I talk about our plan for Wahgnion, a little about the history of the deposits. The mine was developed quite quickly and recently, and lots of pits were opened at the same time in order to feed the plant, which was running at 30% above the nameplate capacity. As a result, some of the deposits have only been drilled down to rather shallow depths and along a very limited length, and we think a significant upside remains deeper and on trend with the existing deposits as they are known today. Wahgnion has been targeted with our second largest exploration budget this year with $12 million. You can see on the map that there are more than a dozen additional targets occurring within a reasonable hauling distance from the mill, including all those located immediately around the existing near-mine infrastructure and deposits. In the very short term, we are focused on Nogbele North and South areas, but over the longer term, a number of satellite deposits will also be targeted with a multi-year effort where we see significant additional upside potential.
So, as you can see from the footage, we have built an impressive portfolio of assets in West Africa over the last 5 years. The mines are well constructed and the teams that we have assembled are really doing a great job across all aspects of the business, from safety, environment, social and security, through to production and cost management. We truly believe in developing our people and giving them opportunities to take on more responsibility. This in turn has enabled Endeavour to grow the portfolio. I'd like to thank our team for their strong efforts last year to achieve guidance despite the challenging COVID environment. We are very proud to have maintained our track record of meeting production and cost guidance for the last 8 years.
I hope you've enjoyed that virtual tour as much as I did. Thank you, Mark and Patrick. For those of you who would like more 3D visits, please look at our website. We have verified tours available on each of our mine pages. We also have historical operating data and financial data available in our Analyst Center. You heard Patrick speak briefly about exploration potential in each of the assets. He will now talk about the exploration methodology he's been following and take us through his most recent discovery, the Fetekro project in Ivory Coast. As background, Patrick has been with Endeavour since 2016, and before this, he was a core member of the La Mancha team after successes at both Arriva and Total. Over his career, regardless of what he was exploring for, Patrick has deployed a proven methodology, always surrounded himself with solid teams.
Thanks, Martino. I'd now like to spend a bit more time talking about our exploration strategy overall. One of our cornerstones as a company over the last several years has been our capability to add value through the drill bit. In other words, in the end, the only reason why we do exploration is because we can bring additional high-quality ounces to the company bottom line at a much cheaper price than if we had to go and buy them on the market. That's all. Once this accountability rules is set, the core criteria here is to identify high-quality ounces that would fit in with our portfolio management criteria and our capital allocation framework. To date, our approach and deployed exploration strategy has resulted in the discovery of over 8 million ounces of indicated resource since the end of 2016, and this at a cost of much less than $25 per ounce of indicated resource, which is at least 3 times cheaper than our West African peers and 5 times lower than the average cost of discovery worldwide. More broadly, we are looking to support our operation by maintaining a 10-plus year mine life, as well as identifying new significant standalone projects through regional exploration that will fuel our future development. We do this with a proven exploration and portfolio management methodology, which is based roughly around a conservative ranking and screening approach, which is completely similar to what is used in the oil and gas industry for a company scale, high numbers of exploration prospects. We start with a tentatively exhaustive and large number of exploration targets occurring within our global exploration portfolio. We then filter all this through an exhaustive set of criteria down to our top best selected target. In that case, back in 2016, it was 40 Monte Carlo simulated targets that were the outcome of our exercise. And then we ponderate all these with a global probability of occurrence, which represent broadly the confidence we have in describing the quantity and the quality of the ounces we are targeting. The overall result represents the quality and what could be expected from our complete portfolio, while incorporating a balanced approach, including some high risk, high reward, and bread and butter type targets. Once the mine requirement priorities are included within our exploration yearly sequences, the 5 years exploration plan is delivered and associated with our related budget, so to match our yearly discovery ambition and KPI in terms of discovery cost per new indicated ounces. Following the success of this method and exploration program since now 4 years, a new 5 years exploration plan is currently being built and is expected to be published later on this year, and it will be based on the enhanced portfolio of the Endeavour asset. Back in 2016, our main objectives were not only to increase our flagship mine life up to 10 years, which we did, but also to bring to the company through greenfield exploration what could be our next standalone development project. Fetekro is for us a great example of the success of our approach, where we have delivered an Endeavour-sized project with promising economic for an exploration investment of only $21 million since 2018. The Fetekro project has delivered, through our recently published pre-feasibility study, strong economics with an NPV of around $500 million at $1,500 gold price. This represents 23 times return on exploration spending. As you can see in the video, the ore body is quite uniform, dips gently towards the southeast, and shows some pretty good lateral continuity of good grade mineralization. It is amenable to conventional open pit mining because it simply starts at surface. We are continuing to explore the whole Fetekro land package with our effort targeting right now and drilling in between Lafigué North and Center deposit, also drilling at Lafigué South, and also addressing other nearby targets. We expect to increase the resource base later this year and incorporate this into our ongoing definitive feasibility study, which will be completed by year-end. We are very excited about our exploration program in 2021, as we have the largest exploration budget to date of between 70 to 90 million dollars. Brownfield exploration will indeed focus on the new mine acquired in 2020, while our greenfield priorities will indeed be around Fetekro, but also Afima, Bantou, Sigiri in Guinea, and around the Tandoukou-Bandoukou cluster in Côte d'Ivoire. We expect our 2021 exploration program to deliver and complete our last year of our 5 years exploration plan and give us a head start on our next strategic exploration one, which will be initiated by year end.